Hey everyone, welcome back to Corporate Decoder, the place where we try to decode the boring stuff companies put out and make it, well, less boring. Today we're diving into a filing from ATIF Holdings, and let's just say there's a reason I brought my magnifying glass. It seems like they're playing a bit of corporate hide and seek with their finances. So what's the story? ATIF is trying to register some shares for resale, but the report itself is a rollercoaster of numbers, legal issues, and a business model that's, shall we say, under construction. They are a consulting company that helps businesses become publicly listed. Think of them as the backstage pass to the stock market. Let's get into it. This filing is all about a resale of stock. Basically, some investors are looking to sell up to 2,467,553 ordinary shares, which are connected to some warrants they have. Warrants, in simple terms, give you the right to buy stock at a specific price. It's like having a coupon for future shares. ALF won't get any money from these sales. It all goes to the investors. Now let's peek at their revenue. For the year ended July 31, 2024, they made $620,000. Now compare that to July 31, 2023, they made $2,450,000. A major decrease of about 75%. That means for every $4 they made one year, they're only making $1 the next year. In general, they seem to be making less money. Let's see where it comes from. Back in 2023, almost half of that revenue came from the USA, with bits from Hong Kong and Mexico. But in 2024, essentially all of it came from the USA, with bits from Hong Kong and Mexico. But in 2023, almost half of that revenue came from the USA, with bits from Hong Kong and Mexico. But in 2024, essentially all of it came from the USA, with bits from Hong Kong and Mexico. But in 2024, essentially all of it came from the USA, so their market is a bit limited. Want some bad news? Let's go to the unaudited numbers, as those are even lower. 6 months ended January 31, 2025, revenue of $200K. 6 months ended January 31, 2024, revenue of $150K. So there's a small increase there, but still the company is struggling to find revenue streams. ATIF Holdings is a smaller reporting company and a non-accelerated filer, not a large corporation. This means they're subject to fewer regulatory requirements, but also perhaps reflects their current stage of development. It's like being a small boat in a big ocean. I've got a warning from NASDAQ because its stock price was too low. Under $1, they risked being kicked off the exchange, which is obviously not good news for a company trying to look attractive to investors. They managed to get back in compliance by January 15, 2025, but it was a close call. It sounds like the stock has been all over the place because the company mentions this issue happening again in the future. To pump in some cash, they entered into a purchase agreement where they agreed to sell ordinary shares and warrants that will eventually be ordinary shares. There was a registered direct offering where they did that. Basically what all of that technical speak means is that they created more shares and tried to sell them to get money. In their operating expenses, $333,500 spent on selling expenses in 2024. Now compare that to 2023's $238. It seems like their expenses have been increasing, so they're making less money, but also spending more money. They justify this due to amortization expenses for TV promotion videos. I'm not sure how that would help, as it's more the long-term plan. Here's something interesting. General and administrative expenses were around $2.2 million. Seems like the CEO decided to adjust their salary and welfare expenses to $1 per month. Talk about cutting costs. What's also interesting is that they decreased rental expenses in lieu of litigation expenses to Boosted Securities and JP Morgan. They recorded an investment loss of approximately $0.4 million versus a gain of $0.2 million the previous year. So basically, their attempts to turn around some cash have not been successful. This is an important metric. It's how much cash the company used while operating. In 2024, they used $120K, but in 23, they used over $2.3 million. This is because there was an increase of accounts receivable in the prior year that the company had to pay for now. In 2024, the company made a loan of $0.9 million to a related party and invested $0.7 million in trading securities. That's a lot of money moving around. It means management is willing to bet on risky investments to attempt a turnaround. To avoid the Chinese government cracking down on them, they sold their equity interest in the Hong Kong and Chinese subsidiaries. It seems they're trying to be a financial advisor to a lot of companies. They list the following trademarks for various items, including Asia Time, CNNM IPO, X. It seems the company is trying to trademark the word IPO as well as their name. Boosted Securities is suing them because they think ATIF cheated them out of a deal. JP Morgan is also suing them about a stock deal. Both lawsuits are for millions of dollars. No good. It turns out they will pay Boosted $1 million to make it go away. The payments are due over a period of time. So what's the point of the filing? Again, some people want to get rid of their ordinary shares. The compensation numbers are not inspiring. Jun Liu, the former CEO, had 120k compensation in 2024 and 240k in 2023, a reduction of 50%. Yue Ming, the former CFO, is in a similar spot. A company called 3i LP wants to sell shares, but will maintain a 4.99% ownership of the shares afterwards. Now, what's my take? ATIF Holdings is definitely in a tough spot. Their revenue is down, they're facing lawsuits, and they've had issues with their stock price. Plus, they've had to cut costs significantly, including a symbolic CEO salary reduction. On one hand, they were able to obtain money and capital contribution. They have listed the challenges they have. However, can management fix them? In the short term, the answer does not seem so obvious. One of the biggest risks is the delisting from Nasdaq and their ability to get people to buy and hold the stock. If the government places restrictions on the company, will the company survive? So in conclusion, ATIF Holdings presents both significant risks and potential opportunities. They need to execute their business plan to generate positive cash flow, all while navigating a challenging regulatory landscape. Thanks for watching, and don't forget to like, comment and subscribe for more deep dives into the world of corporate filings.